Let's check the markets here. We are modestly red everywhere but the Russell today, as we do look at those two big stories, the aftermath of Nvidia's earnings, the SpaceX S1. We'll do Nvidia first for obvious reasons. There were many highlights. You can pick whichever one you want. Revenue's up 85% year on year. The guide was good. The buyback of $80 billion. They raised the dividend. The data center revenue almost doubling. We knew it was going to be good. It was. We knew the stock wasn't likely to do all that much right after. It hasn't. Well, the stock's moved a lot. It's up 10% into the number. What do you make of what you got and what it means now?
I still think it's going to 250. Nvidia is not a great post-earnings reaction stock because, as we've talked about, it pre-rallies. It rallies on the results of its 10 biggest customers, which we hear from weeks before they actually get a chance to report. And as such, the most important number each quarter is not top-line sales, is not the earnings per share. The most important number is always the guide. The guide was ahead of expectations by $4 or $5 billion. That's all we need. And I think that, look, you don't get plus 10 points in the stock after, because look at the rally from April into now. Basically, you had a stock sitting at 170 that nobody wanted, and now here we are, 220. That's the equivalent of a $17 stock running to 22, ahead of the number. Now you got the number that at least justifies the rally we've already had. I think it's a day or two of digestion, and then this thing could take off all over again. Not saying it will, saying very likely in my view. And so you want to sell a stock trading 18 times forward earnings? That's telling you they're going to grow earnings 83% in the next 12 months. You could make that sale if you feel like it. I wouldn't.
Malcolm, here's a good question for you. The one that heard on the street, the Wall Street Journal asks today, or at least points out. Is Nvidia underappreciated? People hear me say that, and I sit back like, what the hell is this guy talking about? At almost $5 trillion in market cap, how can you possibly say that? Are they getting enough credit for their position in this whole ball game? Is there too much apathy towards it because everybody thinks they know the story? It's not the shiny new thing on the mountaintop. Is that causing the stock to sputter a little bit? Jensen talked about it himself. Talked about it being a mystery, mysterious why the stock's been a bit stagnant. What do you think?
I think you have to put it into context of whether you're thinking like a trader or you're thinking about this like an investor. Because an investor is going to look at this particular period and say this company is obviously underpriced, selling for 18 times forward earnings, like Josh just pointed out. 250 should be no-brainer, right? You're about to get the stampede of price adjustments from all the analysts post-earnings, as we usually do. But if you're looking near term, just at 2026, let's call it, it's reasonable to think that the stock is probably going to continue to stagnate because they can't continue to impress us anymore. Any other company has the earnings report that we got last night. We've got 85% growth. We've got a doubling in data center revenue. We even heard the CPU business is going to be responsible for about $20 billion on its own, right? This is a tertiary business if you consider it against GPUs. Any other company would be up 25% after earnings today. But Nvidia specifically, because they have this pattern of beating the expectations by about $2 billion on top line, which they did again, showing us outsized growth that nobody else can do and 75 to 80% gross margins. It's just become such a common story that it's hard to really impress us anymore.
Does the buyback help with that problem?
I don't think so. I don't think the dividend increase even makes enough of a difference, even though it was 25 times what it was before. Because you're not buying this stock because you care about the current income. You're not buying this stock because you want them to financially engineer their way into a great share price appreciation like an Apple, for example. You're buying this stock because it is the innovation engine. You're buying this stock because they're the leader.
If the stock is selling 18 times earnings, they just upped their authorized buyback from $39 billion, which was what was left on the original, to $80 billion. They should probably be doing that buyback right now. I don't know why they'd wait. Like if you're running the company and thinking about the best use of capital, yeah, we understand they're making these one-off investments into, a lot of projects that they think are benefiting long-term, but the free cash flow here is just absolutely exploded. I can't think of a better thing for them to do than some float shrink. while the market may be bored with the story or whatever.
Well,
who's your incremental buyer, though, Josh? I'm serious about this. You have 95% of the sell side that have buys on this, and you have everybody. It's 8.5% of the S&P 500 waiting. So obviously, there's a lot of owners. Who is your? I mean, I don't think at 23 times, or okay, maybe say 18
Didn't
times.
they say that about Apple at 200 and it went to 300?
But I don't think at 18 times. I don't think it's for value buyers are going to be jumping in at 18 times. I mean, I think it's going to take a cheaper multiple for the value players. I'm not disagreeing at all with the growth. The growth is amazing at this company. It was a phenomenal quarter. I think the guidance for 27, people wanted more color. I think that's one of the reasons why you've had this subdued reaction. But I do struggle with, and by the way, I feel the same way about Broadcom.
You
I really
know
do.
Nvidia.
It's the same thing.
Could you be the incremental
Right, they're
buyer?
waiting on you. They're waiting on you.
I have Marvell.
There you go.
I have Marvell,
Good
which we never
question.
talk about.
Good question.
I bought Marvell, and it's up. Well,
I know, but we're
it's up a
talking
lot.
about Nvidia.
Nvidia accounts.
What would
own
get you
all
to?
of them.
What would get you? Come on.
Oh, I
What
don't
would
need to
get
own
you
them
to buy Nvidia?
What do I need to say to put you into this call?
You know what I feel really good about, though? I feel good about the food chain, the AI food chain, after this report. So data centers alive and well.
Well, that's a bigger story today, isn't it? The derivative trade off of this.
100%. So like all the industrial names that I own.
Well, all those, but the ARMs, the SoftBanks, like everything like that. Those are the ones that are running.
Right. And they're a little bit, I don't know if they're off the radar screen as much, but maybe not as much as Nvidia. I just have that's what I struggle with. I struggled with this, the same thing with Broadcom. So I'm being consistent. I think you need these things much cheaper for the value buyers to come in, and I think it's in limbo as a result.
Bill, I mean, how would you address the issue as to whether this stock, the company, is underappreciated, as blasphemous as that sounds coming out of my mouth? You could make the case, though, as some have, that this stock performance, at least after they report their numbers, isn't anything to write home about, unless you think we're at another one of those moments where we were below 170. Remember when Christina Portsanevelos came on? We were like 160 something. She's like, 170 is a line in the sand here. Stock gets above that, and then say, sort of look out above. It took a minute, and then it did. And look where it is now. Are we primed for another one of those?
I wouldn't be surprised. I mean, heck, the stock is up 16.5% year to date. We're not even halfway through the year. I think it's kind of odd that we've become accustomed to, in the SIMI space, 50% moves, 70% moves in some of these names. This is a 16.5% halfway through the year is a banner year. The revenue continues to grow. One thing I was looking at, and I know I trimmed it slightly a week ago, but getting above 205, 210 is similar to that 170 level that I've been watching. I think consolidating here, I like Josh's point. You get a lot of sort of run up in this name. Their customers, all of their earnings have already come out. You have to know and expect what you're going to receive here out of this earnings report. So it's nice to see it consolidate. I think consolidating is really well here. And then I do think we can take the next step.
I mean, look, Baird today, okay, Baird goes to $500. They're at 300. They go to 500. I don't think that's a typo.
That's the standard.
That's 500. Dan Ives, they remain the king of the castle, he says. What do you think about this $500 target?
So I think a lot about a conversation I had with Adam Parker a couple of weeks ago, and he's not like a semi-analyst anymore. That's where he got his start. But he thinks about Nvidia as an asset class, not as a corporation, and he understands it is a corporation definitionally. But you start to think about it as an asset class, and that asset class is compute. You can convince yourself that this probably should be the first $10 trillion market cap company. I don't know if that ever happens, and if it does, I don't know if that takes 10 years. But when you start thinking about the dominance, you accept the fact that there are other players in the ecosystem. There are competitors. There are ASICs that are carrying out very specific workloads where it's more efficient than a GPU. All right, stipulated. We all get that. We own more than one stock. But if you think about it as an asset class unto itself, given its dominance, you can mentally get there to a $500 price target.
It's fair to think of it as an asset class to some degree. I mean, look, the software moat that it has to run its GPUs, there is no other competition. There's no number two, no number three. It is number one.
There's no competition here. Part of the issue for why the stock isn't doing all that much, there's competition in China.
That's true.
And they're largely conceding that, as they said. Okay, so if you don't have any visibility into business in China, that you're just not going to get any, like what you maybe thought or investors were hoping for, does that change the story at all?
What if that's the catalyst? Think about this. China has historically been Nvidia's #2 global market. There are $0 in the forecast coming from China. None. Not a dollar.
They use those words, largely conceded. Well, the market to Huawei
today, but things change, and
I don't know. They didn't change. He went over there. Jensen was literally, feet on the ground with the president of the United States, and came home, and then days later says they've largely conceded the market.
Understood. I don't think that you respect Jensen's gangster enough, because we've had conversations on the show that Apple would be ejected from China. Hasn't happened. Apple's China sales out of nowhere became a bright spot. We heard Tesla would never survive.
Yeah, but
Apple
already had 20% of its revenues coming from. Nvidia hasn't had anywhere near that degree of business coming from.
In the last 5 years, no. But historically, China has been a huge market for GPUs. And I don't think we should just say, because there's nothing in the forecast now, there never will be.
Well, 8 companies are allowed to buy them. Remember, Jensen went on that trip with Trump last week. No one's actually purchased. No purchase orders.
There are approved buyers now. That is something that
China's what's holding back. But more
there were approved buyers before. We just learned more specifics about who could buy. We had already approved the buys.
Yeah,
we didn't know who the buyers may be.
There could be and may well be competition that shows up from China, but I think there are geographical barriers being set by the White House and some of the policies that are there. But furthermore, it's forced Nvidia to become a Berkshire Hathaway of sorts of tech. I mean, you're seeing how their investment is up and down, and now the CPU revenues of $20 billion that are being forecasted. I mean, their investments across their vertical is just amazing.
I want to go back to Steph on the derivative angle of this, because I like how you were taking us in that direction, because I do feel that today that's the bigger story, like the biggest, okay, what's the actionable thing now? You see what ARM is doing. I mean, how are you thinking about that in terms of either putting more money to work in the names that you like, maybe looking at some other names that now you think could benefit, that are cheap enough in your mind to go buy?
Well,
add to.
I've been focused on the industrial plays, right? Because they have obviously a lot of exposure too. And if you look at some of the numbers that Nvidia was, came at it with, was hyperscale total revenue up 115%, AI, cloud, industrial, and enterprise revenues up 74%, physical AI at $9 billion. That is so positive for robotics. So I am inclined to buy more Rockwell Automation or Teradyne in the technology world. I don't necessarily want to own any more of the semiconductor space, because I got my eyes, I'm up to my eyeballs in these things. But I feel good about Quanta Services. I feel good about Eaton, Caterpillar, all these Vertiv. I mean, if you look at all of these companies, on average, their backlogs last quarter were up 34% year over year. Just to put it in context, on average, over the last 25 years, these companies have had backlog growth of 3 to 5%, and we would get excited about it. So the visibility is so extreme. So you can take it any way you want in any sector. That's the area I'm looking at. And I'm also looking at, I do not own something like a Vistra Energy. That stock actually has lagged this space in a big way, and it's certainly on my radar screen.